Okay, hello everyone, welcome to this new masterclass, Sylvain Le Canadien with you today for a new masterclass about how to trade during financial crisis. This is the theme that we will cover together. If you have any question, feel free to ask your question on the chat, and I will just show you some example and some ways of approaching the market during crisis that we are currently experiencing on various asset classes, such as, for example, the stocks, such as on the forex market, on the monetary market in general, bonds, currencies, etc. So how to approach those financials and trading situations when the market is tense and when there is a lot of pressure going on the financial markets, when suddenly you can lose 5 to 10% during a trading session. Suddenly, when the market is basically reversing and not going down anymore, but going up and winning 10% in less than a few minutes because the Federal Reserve just said something on, or the administration just said something, unlocked the planned bailout, just bailed out a company, etc. How to handle all of that volatility during those kind of events? That's the question we can ask ourselves. So first of all, when it's like this, I will advise you to take your Arya dashboard and just adapt the size of your position and the size of the stop loss you are using, but also the risk you are putting on each trade by simply lowering the risk per trade you're just having. So let's say that in a normal situation you are using, for example, and you are risking 0.5% of your capital on each trade. During those kind of events, you will lower your trade and you will use a 0.125% risk per trade. Okay, so you lower the money you put on each trade because you don't know where the market is going, where the market is heading. You're simply speculating, you're not investing. So this is very important. Okay, we are talking here about trading and not investing. When you invest, you have a different type of there is different type of strategies. So basically, you are looking for value in companies that will hold and last for a very long period of time. So basically, if you are investing, you are looking to buy something and hold it forever. But when you are trading, you are basically looking for discrepancy, difference in price and anomalies in the price that you can exploit. Okay, you can use mean reversion strategies, you can use statistical approach, you can do arbitrage. It's way more difficult than that, but let's say that for now you are looking to just find anomalies in the price and just say we have something very interesting here to exploit because of the volatility. You lower the first step is to lower your risk per trade. So basically, if you were if you were used to trade with a 1% risk per trade, now you lower it to a very conservative risk per trade, because when the market is very volatile, you can lose a lot of money very quickly, and you definitely need to have a risk adjusted approach to the market. So 0.125% is a good risk per trade when the market is very volatile. You also have here the possibility to select your entry type. I will let it on automatic for now, and I will also adjust right here the size of my stop loss. Okay, the stop losses that I'm using, I can definitely use different type of stop loss: a fixed stop loss, a day high low stop loss, a U stop loss, a price stop loss, and I will use in this precise case a volatility based stop loss. So you select volatility, but here I'm not putting a small stop loss, medium stop loss, or large stop loss. I will use an extra large stop loss. So basically those stop losses are for people who definitely are trading in very tense market, and we are right now in a situation where the market is very tense. You look at the VIX, the VIX spot index. The VIX is like above 70. It's currently quoting at 75 or something. So the market is very stressed, tense, and also the volatility is just kicking in the face of our market operator. So an excessive volatility is not enough. Okay, it's a normal situation. It's a normal, I will say, way of approaching the market. You can also combine that with a trading mode, combo fractal plus, etc. So all this thing. I will use a break-even trailing mode, and the activation take profit distance is 50%. So when I for example, reach 50% of my take profit level, I want my stop loss to go at my entry price. So basically, I want a break-even price. Okay, so that's a way of approaching the market when the market is volatile. The market moves up, the market moves down, but I have a very low risk per trade. I have very large stop losses. I have a profit factor that is decent. 1.5 is the take profit factor that I chose. I have also a break-even trading mode. So basically, I'm securing my trade. Okay, so when my trade is halfway through my take profit level, I want my stop loss to go at break-even. So that's a choice. You can do different things, but that's the parameter I chose, and that's the way we will operate during those crises. So during those crises, we have to adjust our risk to the volatility, and this is the most important thing. Okay, stop losses large, risk per trade very low, and then there we go. Then we can trade in a more safe way. Okay, so when the market is very tense, don't try to look for the home run and try to pick the bottom and pick the tops, because this is a game that you will on the long term not really be able to win, because this is called market timing, and this kind of trading is based on market timing. You have to find the right timing to do it. It's a very hard game, so if you want to play it, but just know that the odds are not in your favor. So if you want to try it, but do it with a demo account or very little money, okay, just to play. But know that this is not a long-term viable strategies, or you can do it, but you have to have a lot of money or a lot of knowledge about the market. So good luck. So yeah, that's it for this. Let me see if there is any question. There is no questions. Okay, guys, let's keep this very straightforward. I don't see any question on the chat, so if you have any questions, feel free to ask your question on the comment section on YouTube, and I will answer it. Trading during crisis could be very special because you have a lot of things going on. But if you are willing to really approach volatile market, this is the best. This is the most, I will say, comprehensive answer to, and the most comprehensive way to approach the market. Okay, really reduce the size of your position, higher the type of the size of your stop losses, and you will have something viable to work with. We see each other on the next Pip show that will be on Sunday. Okay, so next Sunday we will see each other, and we'll do a Pip show together to analyze again how the markets are doing. We see each other also on our Facebook group, We Love Arya World, and we see each other also in 45 minutes for the next and last Pip show of the week. See you then, and have a nice day.